How an Economy Grows and Why It Crashes by Peter Schiff. We're doing Chapter 17, The Fish Hit the Fan. This is Schiff's prediction of what's going to happen to the American economy in the future.
But before we look at the future, we have to look at the past. This is the Capitol building, representing the government. And this
is the U.S. dollar, representing the U.S. dollar. Over time, the role of the government expanded as presidents took more and more power.
It used to be that the United States dollar was backed by gold. But in 1971, Richard Nixon took us completely off the gold standard.
It allowed the government to print as much money as they wanted. This led to inflation.
Politicians love inflation because it gives the appearance of having a short-term economic boom. But in actuality, you're building yourself up for a greater and greater failure. Inflation just causes the overall drop and crash of the economy to be larger and larger and postpones the inevitable. Do red, make it red. Like the drop.
Meanwhile, more and more American companies outsource manufacturing to China and other foreign nations. Note.
As we outsource these manufacturing jobs, we begin to create a trade deficit by importing more than we export.
Peter Schiff recognized these signs and predicted before the recession that the economy was going to crash. The economists of the day laughed at him, but what do you know? It crashed. And people were amazed at Schiff's prediction.
But in Chapter 17 of How an Economy Grows and Why It Crashes, he made another prediction, this one much more serious than the last. Schiff predicts that China is going to realize that the value of the dollar is basically worthless, so China is going to stop trading with the United States. This is going to cause a temporary recession in China and a harsh depression in America. In an attempt to fix this, the United States is going to try and print money to stimulate the economy. That is going to cause the value of the dollar to plummet and prices to rise.
This puts us on a path towards hyperinflation, where the dollar is basically worthless.
Once the dollar is hyperinflated, it's going to lose its reserve status, and the global economy is going to choose a more stable currency.
Meanwhile, China is still in a recession. This is caused by a decrease in savings after China's long trust in the dollar. But eventually, the Chinese economy starts to thrive. China will now rely on its own currency. This will lead to their ability to increase their savings and capital. This is going to kickstart their economy. But now the rest of the world needs a new standard currency. China's newly rejuvenated economy provides just that. Now the Chinese currency will probably become the standard world reserve currency. But what does all this mean for America? Well, the United States still leads the world in technology and innovation. So much of our assets are still worth a lot. China and the rest of the world will see these assets and want them. They're going to come over here and buy them up. This will leave the U.S. economy with virtually nothing to base its economy on. At the end of the book, the president asked if anyone still remembers how to fish. What this means is that basically the American economy will have to start from scratch, after it had lost virtually all of its economic power to China and other nations.
But what do the economic greats Ryan Evans and Daniel Twiss think about this?
So far, it seems that China has just reaped the benefits of their trade relationship with the United States. However, this system is not sustainable in the long-term future. It relies on Western consumers, namely the United States and Europe, to continue buying and spending money on Chinese products. Unfortunately, demographic trends in Europe, and to a lesser extent the United States, pose a problem. You see, the European population is aging and has a low birth rate. This will lead to a decreased European population and a decreased pool of consumers that can buy Chinese products. China also has their own demographic problems. Their birth rate has also dropped significantly, and their population is aging rapidly. In the future, this will lead to a decreased population, which is a problem for their economy since their economy relies on a giant workforce of laborers. In the past, these laborers have produced all of China's exports cheaply. This cheap workforce also poses another problem. Social tensions are arising quickly in China. The country has over 1 billion people in poverty, partly as a result of the minimal wages paid to Chinese workers. The people will want the government to spread the wealth and provide for everyone, but the government does not have the resources to do this. This will lead China to decrease the number of products it exports, and attempt to balance their financial system. The U.S. heavily relies on trade with China. If they were to decrease this trade, it would hurt our economy greatly. It seems that Schiff was accurate in his prediction that China would stop trading with the United States and go off of their dollar system. Okay, so Schiff may have a point in his prediction about China. But what about back home? We won't try to spend and inflate our way out of our problems, will we? Recent politicians have gravitated towards this approach of big government and big spending. Additionally, though they may not tell the whole story, current and projected voting trends indicate that the American people support this system of spending and inflation. So, we think that we could in fact be on our way to Schiff's predicted path, which could lead the U.S. into economic collapse.
This scenario is not only possible, but it's happened before. Greece also tried to spend its way out of debt, resulting in hyperinflation. The government eventually defaulted on its loans and declared bankruptcy. When the people realized that they wouldn't get welfare checks anymore, they began rioting. And the entire Greek economy collapsed, dragging down the value of the euro with it.
But this doesn't have to happen. We see two possible paths emerging. One path is the depressing downward spiral referenced in the book.
The other path is a path towards recovery and economic growth.
It's up to the American people to choose which path we take. As a nation, we need to decide to produce more, save more, and quit spending money that we don't have.
Only then will we see the economy expand.
And that's a wrap.